All right, welcome back everybody. My name's Austin. We're going to talk about Polkadot. We're going to talk about the European Union, Venezuela, as well as the latest news in cryptocurrency. But Bitcoin's price is dangerously close to going parabolic. And I am not talking about in the next 1 to 4 weeks. In the short term, anything can happen. Bitcoin's price could easily touch the low 9,000s as well as touch the 14,000s. In the short term, anything can happen. The breaking news that just happened today, though, is Bitcoin's realized cap is now $43 billion above the 2017 all-time highs. Many say realized cap, as opposed to market cap, is a more accurate representation of Bitcoin's true value. And the definition, in other words, the realized capitalization metric measures the value of each Bitcoin when it was last moved on-chain. These metrics are coming from data analytics firm. They study the blockchain Glassnode. And since BTC hit 20K back in 2017, realized cap has grown by an increase of 60%. Let me just show you the exact chart. Now, even though we hit price all-time highs back then, the fundamentals just weren't quite there to back the price up. Realized cap, the price at which the coins last moved, most people probably bought their coins back here, and honestly, at the peak. Now, of course, over the next 1 to 2 years, there was a sell-off as well. We were trying to find the true value, and that is what realized cap is, where the coins last moved. You will notice that even though price consolidated and went into a sort of accumulation phase, the major players were taking out their positions. The majority, during the COVID crash, we can see a huge spike right here, and also when Bitcoin hit 14K back in July of last year. What do you think? Give me your honest opinion on this. Comment down below. But generally speaking, what does this mean to you? According to crypto data researchers into the block, more than 72% of crypto addresses are currently profitable, with the largest sum of the investments having been made between 1,000 and 5,000 and 8,000 and 9,000 price ranges. This is where the whales took out their positions, and thus the realized cap improved. We are now hitting all-time highs of realized cap. Obviously, I'm not a financial advisor, but if you're not excited for Bitcoin going into 2021, then you're not paying attention. The fundamentals paint the picture. Okay, next piece of news for Polkadot. Polkadot's Substrate 2.0 recent upgrade integrates oracles at a protocol level, meaning that the blockchain can now see its own environment. Meaning that instead of going off-chain for oracles, it's now at the base layer. Check this out. The Polkadot team released on Wednesday a major milestone for its Substrate blockchain framework, which now provides a way for blockchain applications to interface with the outside world without relying on external oracle providers. What is Substrate again? Substrate is the name used for Polkadot's blockchain building framework. It provides developers with a variety of tools to design their own custom blockchains for a variety of possible applications. And once those blockchains are designed, they can then be launched as standalone or integrated into Polkadot's network of shards or parachains. And this upgrade, Substrate 2.0, is limiting the blockchain's reliance on oracles. The most important feature of Substrate 2.0 is the off-chain worker, a development module that lets blockchains perform advanced computations or make their own web requests to the outside world. So let's unpack this. How is this different than sort of the Ethereums, where Ethereum can't really communicate to the outside world and in turn need oracles to do so? Well, this off-chain worker upgrade leverages Substrate's nodes to perform operations that would normally be outside of the blockchain's capability. Substrate 2.0 allows developers to unload these operations to the nodes running the network, which are able to perform web requests, encryption and decryption, signing of data, random number generation, and other CPU-intensive tasks. Very interesting. Leave a comment. Leave a comment down below. Give me your thoughts on this. But to answer the question, will this make the decentralized oracle providing cryptocurrencies, like Chainlink. Will this make them obsolete? Well, not quite. While the system would allow Polkadot's developers to build complex systems like price feed providers entirely on-chain, removing some of the elements of the trust involved, which is good, the issue of finding reliable data sources, the core of the Oracle problem, would still remain, but developers would have maximum flexibility in the design of their dApps and blockchains. Okay, so generally speaking, huge green flag if you like Polkadot. This would make them less reliant on outside data oracles, more of a complete system. I like it. Okay, I do want to talk about more altcoins, but first, just macroeconomic things happening in crypto. Breaking news, the European Commission has officially adopted a digital finance package for crypto and blockchain. And is this good? Is this bad? Well, basically, it just provides more legal clarity and certainty for the crypto industry. So I'd say it's good. Of course, some people hate regulation, in my opinion, like it or hate it, sort of inevitable. But on September 24th, the EC, European Commission, officially adopted a new digital finance package, including digital finance and retail payment strategies, as well as a legislative proposal on crypto assets. And the aspect that most affects you, I'd say as part of the new legislative proposal, the EC is paying special attention to stablecoins. Specifically, the proposal aims to introduce more stringent requirements for stablecoin issuers in terms of capital, investor rights, and supervision, the text of the proposal reads. And here's the crazy thing. They're putting in this framework because they want to bring more money into their own economy. According to the authority, the new measures will be crucial in supporting the EU's economic recovery, as it will unlock new ways of channeling funding into Europe's businesses. Direct quote, "By making the rules safer and more digital friendly for consumers, the Commission aims to boost responsible innovation in the EU's financial sector, especially for highly innovative digital startups." Bullish. I think bullish. Okay, next piece of news from a slightly different part of the world. Venezuela has legalized crypto mining. Bullish, but will force their industry into a national pool. Slightly bearish. Let's talk about it. The new decree of legalizing and regulating the mining industry in Venezuela was published in the official Gazette on Monday and authorized by Jose Lit Ramirez, head of the National Superintendency of Crypto Assets and Related Activities. The biggest detail would be that it does state that any local entity wishing to mine cryptos must apply for a license and be listed on a government register, sort of like what buying weed used to be like in California, here in the US. But generally speaking, it is a positive step forward. The only unfortunate part is all mining activities must be carried out through an official national digital mining pool of Venezuela, and if you don't, those operating outside of it will face penalties. Of course, the fear is this could lead to massive corruption. Centralizing mining in this way means that the government is able to control any income earned from the pool's combined mining rewards, as well as paying out its contributors. Okay, it appears that the Venezuelan government wants to be in control of as much Bitcoin as they can, and then they'll dole it out to the members that actually mined it. Things are heating up. Next piece of news for two altcoins, Ocean Protocol and Balancer. Ocean Protocol and Balancer want to do for data what Uniswap did for coins. So in other words, instead of a decentralized coin marketplace, a decentralized data marketplace. Now, Ocean and Balancer, right now Balancer, right inside of the top 100, currently trading at $15. And Ocean Protocol, again, inside of the top 100, 40 cents per token. Let's find out exactly why they're making news. Announced Thursday, blockchain-based data monetization startup Ocean Protocol is teaming up with Balancer Labs to create the first automated market maker for data. What is Ocean? Ocean Protocol is about helping people and businesses unlock data and monetize it, spreading the benefits of data and AI beyond the handful of organizations that hoard and control and get rich from it. So instead of big tech controlling your data, it can be put back in the hands of the people. Creating efficient data marketplaces is really the linchpin of being able to do this, according to Ocean founder Trent McConney. Thus, the collaboration with Balancer is formed. Would you use a decentralized data marketplace? Let me know. Okay, that's the video for today. My name's Austin. Hey, by the way, if you haven't already, check out our deep dive we did on a specific cryptocurrency for yesterday. We put it out yesterday. Check it out. But either way, see you tomorrow.